If you've been thinking about year end giving, well, let's talk about one big, beautiful tax hack that you don't want to miss this year because there's big changes coming in 2026 that could shrink your deduction. But there's also some golden moves to make before December 31st to lock in those sweet 2025 benefits. So, should you give now or later, donor advised fund, or direct? I've got the breakdown and the strategy. Let's roll that intro, and then I'll show you exactly how to give smarter, not just bigger. Welcome back, folks. I'm Chris Hobart, the Wealthologist. And today's episode, it's all about the magic that happens when, well, good hearts, they meet good strategy. We're talking about giving, but not just any giving. We're talking about the kind that makes your CPA high five you and still helps the causes that you care about. In other words, benefit to them, benefit to you. So first, let's talk about donor advised funds, deductions, and a little something Congress cooked up called One Big Beautiful Bill Act. Now, here's what it all means and what to do before December 31st. First, the clock's ticking on 2025, right? Not much time left, 2.5 months, roughly 2 months. So let's start here. About 85% of millionaire households give to charity every year. And over half of those gifts happen in the last 4 months of the year because that's when tax planning meets holiday spirit. Here's the big takeaway: nothing changes for your 2025 charitable deductions. But in 2026, the OBBBA kicks in. Translation: if you're planning a big gift, now's the time to make it count. So, what's happening in 2026? Oh, here's a quick cheat sheet for you. You'll need to give at least 0.5% of your AGI, adjusted gross income, to even start getting a deduction. So, if you're in that top tax bracket, your max deduction drops from 37% to 35%, which could be a difference of thousands on large gifts. But if you don't itemize, OBBBA gives you a little bonus up to $1,000 deduction, $2,000 if you're married, for giving directly to an operating charity. So, thing is, it's not huge, but it's something. So let's talk a little bit about donor advised funds, or DAFs. They're a game changer. Now, here's why. You donate now, you get the deduction this year, and then you decide later which charities to support. So they accept cash, stock, real estate, even crypto. And you can give as little as $50 to multiple charities from a single contribution. All right, here's a pro tip for you. If you've had a windfall year, or maybe you did a massive Roth conversion, this is a perfect tool to help offset that tax hit. All right, so what are the smart moves that you need to make right now? I'm going to give you 3 power moves. First, front end load your giving in 2025 if you're a high earner, because next year's limits might shrink your deduction. Use a donor advised fund to lock in deductions right now, but take your time deciding where to send the funds because you can. Also, I want you to think beyond cash. Appreciated assets like stocks or crypto, they might give you a double whammy: no capital gains, and you get a tax deduction. Now, there's also a bonus move for retirees, and I love this because if you're 70 and a half or older, you can use what's called a qualified charitable distribution, or QCD, directly from your IRA, up to 108,000 in tax-free giving. Yeah. All right. To wrap it up, bottom line: be generous, but also in that generosity, you got to be strategic, right? Charitable giving, it should feel good and make financial sense at the same time. So, what's your game plan this year? Let me know. Are you giving more in 2025 because of the tax law changes, or are you waiting until 2026? Or are you exploring donor advised funds for the first time? And hopefully, this helped you and gave you a little bit new light. Give it a like button, share it with somebody who's got a big heart and maybe a big tax bill as well. All right, folks, until next time, Chris Hobart signing off.